So this is question 1 from the textbook higher level, and I just want to go through the rough work first of all, how we do the rough work. I know we have another document that we'll fill out, and over here I've already started putting some of the numbers in, but I'll do that in a separate video. So this is the rough work. We've got two pieces of rough work we need to deal with. The first one is just dealing with what's happened to the assets, so we can work out some of the missing numbers that will then go into our question. And down the bottom then we have the changes in some of the items that might appear in expenses or also in current liabilities. I'll come to that separate. So first of all, we start off with the fixed assets. So the land and buildings last year was 220 and this year is 300. Put that in. I've put in my provision for depreciation and same for machinery. And I'm trying to explain how has the numbers gone from that to that during the year. So there's only 3 possibilities with land and buildings. I could have bought, I could have sold, or there could have been a revaluation. I've X'd out the revaluation possibility for machinery because machinery can't be revalued. So when I look at my balance sheet, first thing I was going to look at the revaluation possibility. I look down in finance by, and in capital and reserves I'd be looking for a revaluation reserve. I don't see one here, so therefore no revaluation happened this year. So that makes that kind of easier. So there was 0 revaluation. So that explained that isn't going to be something that could possibly be relevant for explaining how the fixed assets have changed or how the provision for depreciation account has changed. Down the bottom of the question then we read in the notes, there were no additions to buildings during the year. Okay, buildings that cost 50 were disposed of for 60. So what you would remember from doing depreciation before is the fixed asset account is always valued at cost. So whatever the thing cost, if something cost 100 grand, I sold it, whatever amount I got for it is not relevant. The thing originally cost 100, so 100 is what's taken out of the fixed asset account. In this case, the things cost 50, so I'm taking out something that was worth 50. And that's so that's going to be a minus, so I put that in as a minus. And that will put in as the cost in our disposal account. Now they were disposed of for 60, so that's the trade-in, that's the cash that came in for it. Okay, so that's the cash that we actually got for it, and we'll work out the profit and loss for that later on. So if so we've got a missing figure here, a blank that we have to fill in. We had 220 at the beginning, plus we bought something, then we got rid of 50. We had no revaluation, so our closing figure is 300. So the thing we bought must have been, well, how do we work it out? Well, the opening is 220 minus 50, so that means of the 220 there was 170 left, and we end up with 300 at the end, so therefore we spent 130 grand buying new assets. Moving on to machinery, no disposal of machinery during the year, no disposal, put in disposal 0. New machines are required. Well then if we had 180 at the beginning and we had 260 at the end, we must have spent 80 grand buying new machinery. So that's that bit done. Now the provision for depreciation. Depreciation charge for the year for buildings, writing the operating profit was 12. So my depreciation expense for land and buildings was 12. Now there's a missing figure here which are our disposal for land and buildings. So our opening figure was 70. Plus we had another 12 grand added on for depreciation expense for this year, and we ended up with a closing figure of 60. So that means 70 plus 12 is 82, and we finish up with 60. That means 22 must have been taken out for the thing that we disposed of. And that's put in down here in our disposal account. So that means the thing that we disposed of was worth 28 grand. It was disposed of at a trade-in, or the cash we got for it is 60 grand, so therefore we made a profit of plus 32 grand. Okay, so that's the disposal account done. We need to just do the provision for depreciation for machinery. So we know that no machines were disposed of, so there won't be anything taken out of the provision for depreciation account because of machines which have been disposed of. So therefore, the only thing that explains how the provision for depreciation went from 60 up to 80 is 20 grand, which was the depreciation expense. So that means that the total depreciation for the year, which will go into the question later on, is 32 grand. And the other important figure then is the profit on the disposal. Okay, so that's just explaining that piece of rough work. Now we move on and have a look at the second piece of rough work. So we're trying to work out how much tax was paid, interest expense was paid, and dividends paid. Now, if we were charged 20 grand in tax and we paid it, well then that's grand. But a lot of the time you'll find that there may be dues and prepaids. So we look at the current liabilities to try and help us with that. So it says here that in my abridged profit and loss, that the interest was listed as 8 grand. Now there's interim dividends of 80. So interim dividends means that there were some dividends paid throughout the year, but maybe there were more dividends paid as well. Okay, so we'll have to go and have a look at that now. And then taxation, there was a charge of taxation of 60. Now, so I'm just going to put in the interim that the dividends we've charged so far, about 80. Now, and let's look at our current liabilities and our current assets. So up here we see that taxation was 90 it was an amount that was due at the beginning. So I'll put that in here for taxation. Plus another 60 was charged during this year, okay? And then it says that there was a closing taxation figure of 60 grand. So I'm going to take that away. So that means that the amount paid was actually last year's. So we were charged 60 grand for this year and 60 grand is due. So that means that what we paid is last year's figure of 90. The interest expense, it doesn't mention that interest is owing or interest due or prepaid. So therefore, if there's no opening due and no closing due in the current assets or current liabilities, then the amount we actually paid was whatever we were charged this year, 8 grand. Dividends, again, I'm looking to see, does it mention anything about other dividends being owed at the end of the year that we haven't paid yet? No, it doesn't. So therefore, the amount that we have as interim dividends, that's the only amount that was paid. So I hope that's useful for you.